Recessions scare the life out of investors. The stock market drops. Layoffs are everywhere, and the news screams that the economy is collapsing. Most people panic, sell their investments, and lock in huge losses. But here is the truth. Recessions create some of the best opportunities to build wealth if you know what to do. So in this video, I am breaking down exactly how to invest during a recession without losing your shirt and maybe even coming out way ahead. The biggest mistake that people make. The number one mistake people make in a recession is panic selling. Imagine this. You buy a stock at $100. A recession hits, it drops to $70. Most people freak out, sell, and lose $30. Then, a year or two later, the market recovers and the stock is back at $120. Who won? The patient investor who held on. Number 2, make defensive investments. History repeats itself, and history shows that markets always recover. During recessions, not every industry suffers the same. People still buy groceries, pay for electricity, and need healthcare. That's why many smart investors shift toward defensive stocks. Defensive sectors are areas of the economy that provide essential goods and services, leading to stable demand even during economic downturns. Examples of defensive stocks are 1. Consumer staples, companies like Procter & Gamble, Walmart, Coca-Cola, to utilities, electricity, water, gas companies. 3. Healthcare, pharmaceuticals, hospitals, medical supplies. Defensive industries stay stable, even when everything else is falling apart, making them a safer place to park your money. Number 3. Dollar cost averaging is your friend. Instead of trying to time the bottom, which nobody can do, use the system of dollar cost averaging. Dollar cost averaging simply means investing the same amount of money at regular intervals, no matter what the market is doing. When prices are low, you buy more shares. When prices are high, you buy fewer. Over time, it averages out, and you don't have to stress about predicting the future. Number 4, invest in bonds, cash, and alternatives, such as gold. Recessions are also a reminder of the power of diversification. Stocks can be volatile, but bonds and cash are your cushion. For example, U.S. Treasuries are considered one of the safest investments in the world. Some investors also turn to assets like gold, real estate, or even REITs, which can protect your wealth during turbulent times. Hedge 5. Why? Recessions are an opportunity. Recessions are scary, but they also produce generational wealth. Warren Buffett says, "Be fearful when others are greedy, and greedy when others are fearful." Think about it. Amazon, Apple, Netflix. Their stocks dropped massively in past recessions, but investors who had the courage to buy during those crashes saw insane returns once the economy recovered. So instead of running from recessions, prepare for them, man. Look for opportunities. Number 6, here's a practical action plan. Here's your recession survival investing plan. Don't panic, sell. Stick with dollar cost averaging. Diversify into defensive stocks, bonds, and maybe gold. Keep some cash ready for opportunities. Focus! Long-term, not short-term headlines. At the end of the day, recessions aren't the end of the world. They're simply part of the economic cycle, and the investors who stay calm, stay invested, and stay disciplined are the ones who come out richer on the other side. So what's your strategy for the next recession? Are you buying, holding, or selling? Drop your answer in the comments below. I'd love to hear your thoughts. And if you found this video helpful, hit like, subscribe, and share it with a friend who needs to hear this right now.